Legends. There it is. Got it working. Hope you're well. Rich, how you doing? Hope you're doing well, legend. Restart this bad boy. There we go. Hope you're all well. Welcome to the Daily Buyer Show. It is Friday the 19th here in Australia. It's Friday midnight for Richard the Legend. Glad to hear you well. It's midnight for you from all my friends in the UK. And it is sometime on the 18th in the evening for all my US friends. So welcome. We dig all charts as they relate to crypto. Disclaimer, this isn't financial advice. I'm not a financial planner. This is just my view of the markets for educational purposes only. Yes, almost the weekend and almost Christmas for those who celebrate, or the holiday season for everybody else. So exciting times, boring times for, well, actually, you know what? It's not really boring times for crypto. Is it ever really boring? So good time of the year, my favorite time of the year for sure. So let's get into it. We had a CPI, we had the CPI come in last night. Well, last night for me, this morning for me. And we had a surprise beat, right? So we had a pretty low read compared to forecast. And if you look at the drop, that's the lowest drop we've had in quite a while. Since March this year, we didn't really have such a significant decrease and had been sort of trending up. And obviously on straight away on X, you see the bulls doing their laps, lower inflation. Inflation's no issue. The Fed's going to cut rates. You know, just typical behavior that we saw on X. And even in fact, even in markets, we saw the news-driven price action. So we're going to dig into that. I'm going to give you my take. I did a post on X before about an hour ago. So I'll just give you the TLDR on that and we'll go through some charts. So as always, we can stay balanced in our approach to markets, you know, not get thrown around and chopped around with every bit of news. Let the charts guide us. Yeah, I've got 2 kids and I've got I've got 2 daughters. I've got a 3rd daughter on the way any minute now. So, you know, if you legends find that I miss a stream, it's probably because we're in the hospital because my wife's about to give baby any moment. So, give birth any moment. So just quickly, on the if we just go straight to what everybody's talking about, right? So they're saying that inflation print is lower. Inflation's no concern. The Fed's going to start cutting rates. In fact, in the CME probabilities, there's almost no change, right? It's been here at a pause, 75, call it 75 to 72% pause since the last cut. Nothing's really changed, right? Even the probabilities. So even when we look at the probabilities going into next year, we're still forecasted for 2 cuts. And the only thing that changed was instead of April, the next cut, it's shifted to potentially in March, right? So largely, where this leaves me is largely unchanged, right? So it doesn't really change the picture. We're still high rate environment and relatively tight liquidity. Okay, so that doesn't really change the picture much. Now, I did do a proper, more of a deep dive that you can go through on my X if you just go through this thread here where I point out the specific charts. I won't do that now because we'll go through some stuff anyway, but I'll just point out that, in my opinion, the CPI beat won't force the Fed in to take any aggressive actions, right? So if you've been keeping up with some of my recent posts, what I've been saying is that the Fed doesn't intervene unless something breaks, unless something significant happens. So when we got the labor data yesterday, showing a softening labour market. A softening labour market's just that, a softening labour market. It's not going to force the Fed to intervene because, you know, job losses are through the roof and mass layoffs or anything like that, right? It's just a softening labour market. And realistically, this is all indicative of a softening economy, which is just telling you the economy's weakening. Now, when the economy's getting weaker, the Fed's not proactive. They're not, you know, chopping and changing or even just intervening and doing things as they appear. Like, they're always behind the ball, and it's always when it's often when it's not too late, but after the damage is done that they intervene, if you just look at historically. So hence, my theory remains the same or my thesis remains the same. Even with this CPI beat, it doesn't really force the Fed into more aggressive easing. So hence, we're still left with the tight liquidity environment and still only 2 cuts priced. Now, we did see initially, if we look across some of the markets, right, especially in the indices, we did see initial spikes, right, in some of these indices, but most of them closed bullish, but not overly bullish. Like, at one stage I saw that some of these indices were up. Yeah, see, so close here, right? At one stage they were up 1.52% and then kind of closed mildly bullish, and we're still in these caution zones, right? And we've mapped out this FOMC level. Again, if you've been keeping up with me on stream, we're monitoring the FOMC level as our short-term barometer on the risk bid, right? Because the Fed gave us a cut, which is what they're trying to do there is stimulate risk, right? They're trying to entice people to take on risk by making capital cheaper. So we said in the short term, as we've got these caution signals developing, as we're in major tops, right? We're in all-time highs across these indices. In the short term, with the Fed providing the gesture of take on risk, here we're giving you a cut sort of thing, and the market rejecting it, that's telling us, at least even in the short term, that there's weakness coming into markets. And if you combine that with all the other broader weakness signals we've been tracking, we're still in a relatively, Bitcoin is bearish, right? But when it comes to some of the global indices we're tracking now to see how bearish things are going to get, we're still in a relatively potentially transitional market where there's weakness emerging and there's weakness, I'd say, growing and caution growing. The liquidity hasn't arrived, right? So the Fed's attempts at stimulating some type of liquidity hasn't shown up in a big way. So if we go back to net liquidity for a moment, here, overnight we got the new data prints and the Fed did slightly increase its balance sheet, but the TGA the TGA also refilled its wallet. So it offsetted that move in liquidity. So if you look here on right here, you'll see that it was flat, it was muted. So the liquidity was actually muted. So basically, the Fed's balance sheet that expanded slightly was offset by the fact that the government didn't spend and they actually refilled their wallet. Okay, so here's the TGA, right? Refilling. And here's the Fed balance sheet slightly ticking up. And that's why they offsetted each other. So again, remember, we're saying that for Bitcoin to have any type of meaningful rally, or if you're bullish and you're trying to be a bull, Bitcoin needs expanding liquidity. Okay, so hence that was a flat muted liquidity. That we've seen a slight uptick, and if it's going to be a slow dribble in like this that potentially is volatile and turns over, that doesn't really support Bitcoin going into new price discovery parabolas or shifting the macro trend. Okay, at best that's going to support a counter trend rally if we're getting this, slow grind of liquidity slightly coming up. At best, I'd say maybe counter trend into somewhere into the range. We'll explore that in a moment. But basically, liquidity remains tight. The rate environment still remains high. So it's a high rate environment. And the initial response from markets, okay, it's only been 1 day of trade. We'll wait till the week closes out, and tomorrow we'll deep dive the markets again to see, typically with these news events, it's often best to let the dust settle, right? Unless you're specifically a news trader and you have an edge in the way that you trade news. For the rest of us, okay, it's always better to let the dust settle after the news and before jumping into positions, especially, right? So let's let this week close, because we've also got Bank of Japan tomorrow, right? So we've got, not tomorrow. At some stage today, we should get Bank of Japan policy rate, okay? So for some reason in this thing that I look at Forex Factory, it still just says tentative. So I'll do some research on that after the stream, see if I can find out when that's going to happen. But we've still got that. And now, if you guys remember from 2 Substacks ago, or 1 or 2 Substacks ago, I said that we're in a 3-week volatility window. This is the last week of the volatility window, because after this week, we go into holiday season, basically, where markets, you got funds probably closing up their books, people going on holidays, maybe thin liquidity, etc., and no real major macro events until next year. Okay, so this is it when we finish up this week, and it's been a macro heavy week with rate cuts, with data, with Bank of Japan. So hence, especially given that we just had this inflation print now, let's let the dust settle and take a look at how the markets respond going into the weekly close. And that's probably going to tell us a lot, right? So that's what will be on watch over the next few days. But at this point in time, my bias is largely unchanged because, even if we just look at things like the bonds, right? Usually, so if you think about the reaction on X, and if you think about the reaction around the market when you get this lower inflation print, people screaming, oh, okay, so that means the Fed's probably going to cut rates, or they're going to cut rates quicker and faster and all that kind of stuff. Well, the bonds aren't screaming that the Fed's going to intervene. Like, the 2 years still stuck in this range it's been in for ages. Like, usually, if something drastic happens, you'll see a drastic move, especially in the 2 year. If they think the Fed's going to start cutting aggressively or loosening aggressively, in most cases, you should see that initial sharp move, 1, 2, 3, at least 3 or 4%, down. You'll see like times like these where it has those sharp moves, right? That's when the market really anticipates the conditions changing, see? Whereas we're stuck in this sort of range that we've been in since September. It's been like, we don't really know what's happening. So hence, we'll let the dust settle this week. No reason to change our bias on positioning or anything, because Bitcoin structure hasn't really changed either. So that's where we're at. So around the grounds, just quickly, before we dig into Bitcoin and crypto. So even the DEXI bid, right? If the market was anticipating the Fed stepping in more aggressively, you'd see a risk bid coming out of it usually, or at least you'd see maybe not even a risk bid. You'd see the DEXI losing strength because you'd anticipate participants want to get out of the dollar if they think that the Fed's about to aggressively change course and start cutting rates, right? So you'd think that at least the DEXI should have given us a move to show that participants believe the rate environment's changing, right? So we're not even getting that. We're still in this FOMC range where we said this is probably going to be supportive of more risk off, even worse for crypto. Okay, and this is potentially supportive of any type of like if crypto is going to rally in any sort of way, I can't see it rallying where if this is trending up, because we still got this cycle ending pattern in play as well. So if it's trending up towards here and that's just the continuation now to move higher, that's participants moving into the dollar, right? When the dollar strengthens, it doesn't usually mean that Bitcoin's going to strengthen in alignment with it. So especially in the current conditions. So DEXI, USD JPY, considering I got Bank of Japan hiking. I believe they're going to hike, but they're offsetting with QE. We'll see when they actually do it. So this is on watch, right? If the USD JPY starts turning over, that means the US dollar is losing strength, okay, against the yen, and we've got to consider the implications of that with the carry trade, right? Because the carry trade, obviously, it underpins a lot of that global liquidity. So if the yen starts gaining strength, it could be indicative. We'd have to analyze that at the time of an unwind with the carry trade, which would be a massive headwind for crypto and risk markets. That would impact. I'm pretty sure that would also impact the global markets, the traditional US markets, just as heavily as it'll impact crypto, right? Because the global markets will turn after, right? It takes them. They're not going to top. Crypto always tops sooner. So if it's a carry trade unwind, I can't see how that's good for global markets either. We talked briefly about the indices. There's not really much else to share there. We've had a quick look at the RTY or the Russell, right? And they're all still under the FOMC level. So in the short term, we haven't really seen the bid step in yet. And now this internal bullish price structure is showing signs of breakdown. So if that means the RTY is also then turning over, okay, to go lower like this, right? If it's heading right down, and that's topping, then if we come back to our risk dashboard, that's signal number 2. That's two high end on the risk curve markets that are now giving the signal. Hence, it usually leads the NDX and the SPX down too. So the RTY, Bitcoin, and Nvidia will often be a leading signal, especially going into tops on the NDX and the SPX. So we've seen the Nvidia weakness emerging and some bearish divergence coming in. So these are all flashing caution. So hence, if the RTY just keeps turning over, that means that capital is leaving these smaller caps, right? And usually where do they retreat? If they're not retreating into the larger caps, back into the major indices, that means they're potentially moving to cash or they're moving to gold if gold is getting the bid. It basically means they're moving out of risk, right? And they're moving risk off. So hence that's the flow that we're tracking. Nikkei still relatively okay. We had that test of the structure low. This could be a big range, but again, we'll see what the Bank of Japan does, and we'll see if what this is going to look like. But again, if this is turning over as well, right, another signal of weakness for the broader markets and the global markets. Let's jump into crypto. Quick pulse check on our favorite chart. This is stablecoin dominance. If you're new to the stream, you'll know that this is Richard and I's favorite chart. This essentially tells us what crypto participants are doing. If this chart is going up, it means that participants are moving into stablecoins, and they move into stablecoins when they're either taking profits or they're essentially getting out of the market, right? When the stable coins are going down, so when this dominance is going down, it means that the coins are being deployed. Usually it means that the coins are being deployed into tokens, right? So this is why it's such an important chart, and you can see clearly how this has been such a good guide on the historical cycles and the major turns as well as the minor turns within the cycles. You've got every time we've got this multi-cycle trend line where it seems to hold as the major support for major tops in the cycle, okay? And we've come into it and we've given the historical signal where weekly structure turns bullish. The bands, the TT bands, I give away these bands for free. Just DM me on X if you want them. The bands have turned bullish. And now we're confirming above the breakout trend line. So historically, when we've done this and we've moved up like this is moving into a deep bear market. So if you're participating in crypto in whatever way, shape or form, if you're an investor, a trader, this is a very important chart for you to look at to understand alignment on the context of the market, right? Because this is showing you that all of those people calling bottoms are going to be in for a big surprise if this keeps charging up even to somewhere up here, because it means Bitcoin and your altcoins will go much lower. So we've got to be keeping an eye on this chart, especially right now, because we're seeing the move higher. Now, there will be a counter trend rally that comes in, and I want to talk about that. I just want to talk about the potential setup for it and some setups that I'm seeing, so that if it starts to come to fruition, you've always got to be a few steps ahead with your plans, right? So you've got to know what levels you're looking for so that you're never surprised when your levels hit or when price is at your levels, okay? So you know then when you've got your levels, or you call it your points of interest or your areas of interest or your place of where you want to trade, whatever you want to call it, you've got to have those levels planned in advance so that once price is at those levels, you can then move to your execution phase. You can look for your entry triggers. You can look for your confirmation. Again, whatever you call it. But I wanted to kind of lay out some scenarios because we've got some interesting price action developing, right? Where I know most of CT is probably screaming, this is the worst cycle, it's this, it's that, it's so choppy, this, that, and the other. And yes, that is the case, especially if you drop down here on the 15-minute chart, right? And you just look at some of this price action. I think this morning I saw, when I woke up, I saw that one post that said 350 million or 350 billion, I don't even know the number, of shorts were liquidated, and then an hour later it was like 400 million of longs were liquidated. So I'm sorry, I laugh because it is a little bit funny. I'm sorry if you got chopped up in that, but anyway, so I understand why a lot of CT and everywhere else is screaming chop, terrible markets, etc. But if you just zoom out and if you just lay some context and look at some of the higher time frame pictures, you can get you can be a little bit less wired, let's say, when you zoom out to the bigger time frames. And what I'm seeing is we've got our major flip zone. Okay, there's not much more to talk about that at the moment. You can go back to you can even just check many of my shorts that I put out that cover the major flip zone, right? The main thing I would point out here is this is the weekly structure, right? Now, this is going to be valid as a new weekly lower high, okay? So if price comes down to touch this low, even if it just sweeps this low, all we need to happen is for this low to be touched, whether it's a sweep, whether it's a slight close below, whatever it is. The moment that this low is touched like this from price, this becomes the new confirmed lower high, okay? So if you're asking why it's not confirmed now as a lower high, well, the answer is, how do you know that price is not just going to do this and go higher? And if you're saying, I don't know, well, that's the right answer. And that's why it's not a confirmed high, because confirmed implies that it cannot be changed, right? It cannot be moved or changed. Hence, this can only be confirmed as the high, as the lower high, when we touch this low, because soon as we touch this low, okay, we know that if it goes back up, it's shifting this structure, okay, because this high has already created a new low. Doesn't matter if it's a weak low, these are all the signals that we look for to anticipate shifts in structure or for the market to show its hand or its intention, right? The fact that it just touches the low, okay, tells us that it's created a new low, okay? So this can't be confirmed because we can't guarantee this is the new high until it touches this low, because it could just go up further, right? It could do this and then come down and grab this low, and then this is the new primary high like this, okay? So hence, coming back to just a few of the higher time frame setups that I see, if this is our weekly structure, we know that the next macro continuation trade is to look for a weekly short, okay? So we're looking for a short that is timing the weekly high into the low, right? Now, you know that if you've been around on this channel for a while, I was looking for the deeper retracement into here for the bigger macro short for continuation, right? To continue this. Because we didn't get that deeper short, right? Because we only came to here, I believe that we may just be in a bigger range, or we may come down, make a weak low, or even if we come down to this low, it builds higher probability for me in terms of the way that I just read price action to get a good reaction, right? Because since this point in time, we've just been pretty beat down, and now we've actually got liquidity, which is kind of like fuel. Think of it as like fuel for the market to move in a certain direction. We've got fuel building all through here. So if this ends up being the high and it comes down to here or here, then I think we could get a decent reaction potentially back up here into maybe even into our flip zone. But we'll analyze it as price develops. But I just wanted to point out to you guys early, as I like to do with kind of like the bigger moves, it wouldn't be out of character for a potential counter trend to be brewing that may come into fruition. Could come maybe later this month, but I'm looking at closer to, I think maybe Jan might find some alignment, because again, the main setup I'm looking at is for a counter trend rally, right? Like I just explained, because we're building up this liquidity through the range here, like all this chop, right? All this chop that's happening essentially is creating liquidity pools, right? So from here to here, right, this is now a big trend line of liquidity that if it doesn't get like if this just keeps going down like this is all liquidity for a potential move to come back up, take all that liquidity, and then keep moving again, right? And then if you just look at the way price moves, that could end up developing daily and weekly highs on the higher time frames. So hence, oops, let me just clean this up a bit. Hence, I'm looking at this move. Now, specifically, if this move doesn't have a bounce through here, okay, so this is our next daily low. So this is the internal daily structure, okay? This is the primary daily structure, okay? So this is the primary structure. So the primary structure is bearish. The internal structure is now bearish, but it went bullish and bearish. So hence we've got a potential range developing, and we've got what's called a complex pullback. If you go on to my building block series, I explain my my thesis on complex pullbacks. So if this liquidity here, if we bounce here and then we come back up to take this liquidity up here, or this ends up coming back up in some way to at least here, I will be interested in shorting here, right? And I'll be sizing into a short here because this is still untapped. The primary trend's still bearish. The daily trend is still bearish, the primary trend, and this is all internal price action. Okay, so if we bounce here and head up, I will be looking to build that bigger short again, the macro short for continuation. However, if we don't move beyond here, so even if we bounce here, say FOMC level holds, and then we come down to here, right? Especially if we don't even get moves like this, we don't really get much response. If we just keep going like this down to here, this is the setup this is the only place right now I would look at taking a long, any type of meaningful long, and I'd just be targeting back to here, right? Now, I'd obviously, in my systems, I'm set up with the way that I manage my trades to capture any further upside. Like I do trail stops, etc. However, I'll be mostly looking for range trades. So the bulk of my position will be from here to here. That's where I'll be looking to make the bulk of my money. And anything else is just, if it ends up turning over in a more meaningful way, then that's just a bonus. Maybe I'll look at how to re-add to the position, that sort of thing. But that's all too much speculation at this point in time. At this point in time, I just need to have my plans. And my plan is, if this doesn't result in a bounce, a meaningful bounce especially, then this is building as a higher probability level here. Even if it comes down into here, right, or builds up some internal liquidity sweeps and turns back over to reclaim, this is the only kind of area I'll be interested in along. And it sets up a decent trade as well to here. Right, that's the only kind of long that I'm interested in at this point in time. Now, I just want to give you some more context for this long, right, where if we zoom out, now I showed you that setup, I showed you on the weekly because this is the primary time frame that I'll be looking at how this move develops, because this kind of move that comes down here, right, when you consider structure on the daily and then the weekly, right, this is probably at best, the best setup for this particular move would be weekly sweeps of this low, okay, similar to this kind of pattern, right, where weekly sweeps of this low would indicate a failure to break down here, and it indicates that either buyers are stepping in or sellers are getting exhausted. Then when we watch the reactions, especially then when I shift to the lower time frames, okay, that would be the strongest signal to take that long back into here, okay? Now, this trade will likely play out over at least days to weeks, right? So if you look at the time frame of this, okay, this is an 18-day before this high was put in. So you got 20 days, almost 20 days before the high was put in. And this is on chop, right? So it's on basically chop and volatility coming into FOMC, coming into all this uncertainty. Now, a move where price is beaten down, where we take this low, no reaction, all this liquidity is being built up here, take this low, you should get a pretty strong reaction if buyers are stepping in. And then you got so many stops to trigger along the way that it should squeeze pretty quickly, okay? But realistically, I've got to have my expectations set to it being potentially days to potentially weeks, right? For the expectations on that trade, because it is based on daily and weekly structure, right? So hence you've got to give a trade like that time to play out. Now, the additional context I wanted to show you guys is, if you just look at how the monthly candle's developing, we've got November low here, okay? We've got December as an inside bar so far, which represents the compression that we're seeing, or the chop and the ranging kind of price action. So hence, if you look at the way that major pivots develop, right? If we look at how these pivots develop, notice the consecutive monthly sweeps, okay? Those sweeps often lead to some type of move, okay? Now, whether it's a major expansion move or whether it's how the extent of the move, we're not sure. But typically when I look at these kind of moves, if December closes as this inside bar, okay, then what I'd be looking at is ideally January. The best setup for me is January sweeps both of these, okay? Now, once January sweeps both of these lows, I'd expect that we'd come to at least mitigate the other side of this this December candle. So hence, whether we sweep one of these lows or both of these lows, we should be targeting at least here, and then we're coming back into our major flip zone. So it would be very optimistic if we're back up here as the target, right? When you layer in additional context, right? Especially on the weekly, our bands, our fair value gaps, order flow, all that sort of stuff. This is going to be a very high resistance zone, especially trying to reclaim 100K. So I think this would be a stretch, and you wouldn't want to be targeting here, but I'd be targeting at least the December highs. The December highs makes a lot of sense, and then I'd be watching into here. So hence, this lays some additional context where if you just look at this setup that's potentially unfolding, that's where I'm thinking to myself, right? Either. Sorry, I'll go back out to the monthly. Either while we're still in December, we're going to come down and sweep November lows, okay? And if we do, I don't see us going all the way back up here, but I think that a sweep of November lows, then we'd need to look back out on the weekly and then look where the draw is here, where the highs are, and that's where I come back to this range. So we've either got, if it comes before the end of the month, we've got the sweep of November lows, which is also potentially a sweep of the weekly low, which is that area I've been that I was just explaining, okay? And then I'd be targeting based on the weekly, right? Back on the weekly highs, okay? But if it doesn't come in November, then that actually builds a higher probability trade in December, because if we don't get the sweep in November, that's going to give December an inside bar, okay? So then it just creates, it shows that there is a bit more resilience in the demand side of the market, okay, in buyers. But two, it just then creates more context for sweep if we come into the lows, because we're seeing resilience in the buyers. Then we're going to see sellers potentially attempt to push market lower, and the resilience holding. If these sweeps hold, okay, then it sets up to a decent move, right? So hence, if we get the long setup during December, it means it's a sweep of November lows and we've still got that weekly setup. But if we don't get it during December, it means that December's going to close as an inside buy, and it creates higher probability for that, what could be an even bigger move if we come down and sweep into these levels in January. Okay, so just keep that's I'm just keeping that on my horizon, especially because we didn't come up and do a deep retracement here. If we'd had done a big deep retracement, I wouldn't be as eager on this setup as I am right now, because we haven't, and we've built up potential liquidity all through this range to at least short squeeze higher. That's why this is building as a higher probability long for me, even, and we got to make no mistake, it's a counter trend long. Hence, that we got to treat it appropriately. Now, just to finish up, this is going slightly longer than expected. Last thing to finish up on is just on the short-term picture, and I just wanted to revisit our FOMC levels. So if you guys remember, coming into FOMC week, I called out the inside-outside bar candles. Then coming into FOMC week, I called out the sweep of the outside bar highs. I said we need to observe the extremes to tell us which side of the market is claiming dominance. We got the sweep of the highs, and I told you guys that I'm short biased, looking for shorts, just at least down back into these lows again. And our barometer level was the FOMC level, because if market participants are embracing the Fed's gesture to take on risk, they should be trading above the FOMC level. And that's where I said, if we get above the FOMC level, I'm going to pause my short bias and observe price action at that time. My bias remains the same, but only if we get above the FOMC level without taking out this low. Okay. So if we take out these lows, okay, and then we're trading into the FOMC level, I'll be watching closely, but reclaim the FOMC level, and then I'm going to be pausing. And if you're with me on the streams here, we'll analyze it at the time. We'll analyze the broader signals to see if there's something developing, okay? If there's, at least in the short term, some demand stepping in to potentially drive somewhere here, okay? Rich, thanks, Rich. Yeah, look, I think, you know, I'm not always going to get it right, as with any trader, and I know that. But I'm pretty happy with how we've called it over the last weeks and months. You know, if you guys have been with me, you know that we've been pretty accurate in our read and staying out of danger on the long side. And depends on how long you've been with me. You would have known that all my macro bull market trades were all unwound through here when we saw the weakness. But yeah, we've been pretty good. But I think we just got to stay objective as objective as possible, following the charts and the data, and that's all we can do, really. Hey, that's it, Rich. So that's where I'm at now. If you remember from yesterday's stream, I said before this move happened, I said when we were in here somewhere, I said if we get any retest into the FOMC level, i.e. this one here, sorry, was it this one here? Yeah, somewhere here. I said that that's what I'd be looking to short, but because I'm in Australia and this happened at 1 a.m., didn't get my opportunity to short. So since then, I have been looking for some lower time frame opportunities, but at this point in time, considering the context, considering the final volatility week, considering, you know, the moves coming to potentially done into these lows, and I've got a baby on the way, 2 kids currently, we're heading into Christmas. I'm not too keen to jump to rush into any trades here, right? So I missed my first setup that I wanted here. So I'm happy to sit this one out, and we've got plans, right? We've got plans for the bigger macro long down here. And otherwise, we've also got plans for the short up here. And as long as you're with me here on the streams, you'll know when they're shaping up and what they're doing. But in the short term, I'm not too focused on short-term trading at the moment because we're just too close to Christmas and the end of the year and all of that fun stuff. But that's it. That's it, legends. Rich, hope you're well. Hope you have a good sleep. You know, get good night's rest. Thanks for joining. Thanks to everybody else that's joined. Oh, if you're new here or you're not subscribed yet, please subscribe. Helps the channel, helps me. Leave a like, leave a comment. Follow me on X if you're not following me there already. TravB Crypto. My links are all in my YouTube description. I'm trying to get to 100 subscribers before the end of the year, and I think I'm sitting on about 93. So see how we go. But thank you, legends. Have a good night to the rest of you.